Hey everyone, welcome back to Yuri's Box. In this video I'll be talking about TLT, the weekly close. If you like this kind of content, consider leaving a like and subscribing to the channel. And as usual, nothing in this video is financial advice. So we just got, I'll get it straight out of the way. We got the Moody's downgrade as of, little over under half an hour ago, something like that. And Moody's was the last rating agency to have a pristine AAA rating on US debt. And again, this continues to feed into the narrative that, especially things on the long end of the curve are untouchable because of all the deficit spending, and the supply is just going to crowd out any demand. But again, I've made a video on that a little while ago. And I continue to make that my main argument, rather than being a function of the supply. The long end is more a function of the growth and inflation expectations. All right, and the best example I can give you is again what happened after the 2008 debacle. All right, we had increases in the debt. Trump gets into office, he adds fire as well, like everybody else, adds fuel to the fire rather. And we still found a way to go down to 0%, And again, this was at a time where, the deficit was basically going negative, right? So I still maintain that outlook. This will definitely, fuel some of the, the deficits and all that good stuff, and that narrative. But again, I stand by my previous views, and that's pretty much it. So as far as TLT is concerned, I kind of cleaned the chart up a little bit more, and I tried to find other things to potentially keep in mind. You could also look at this also via a kind of a falling wedge, if you would like to call it like that. And you could also see how we're kind of building up to something here. You could also say that we could have a small bounce here, then a small rally perhaps into the summer, and then we finally bottom out, sweeping the previous low from 2023. But again, I can't stress this enough. I'm open to both outcomes. We could easily hold support right here, and the parallel channel stays intact. Perhaps, this is a catalyst for something else. I have no idea. No, but the parallel channel could hold. We could also absolutely fall through. That is definitely an outcome, granted. But again, given everything that I've spoken about in my previous videos, and also given the fact that the long end of the curve is really pricing and a function of growth and inflation expectations, I don't see the strength in the economy that would make me skeptical on the long end of the curve. So again, this doesn't really change anything for my bullish outlook that I've had ever since I started making videos in February. So again, could this be a falling wedge where we're just building up to something here and then, eventually we break out in either direction? Perhaps. Again, I'm open to really seeing this parallel channel hold. Also, I wouldn't be surprised if we actually have a sweep to the previous low, like we saw in 2006 and 2008. We had a secondary low in 2007, and then we went on, on a merry way. So again, this is just another idea. I would keep that in mind as well. As far as the data is concerned, today we had my most hated consumer survey. Again, if you've been following this channel, you know how much I loathe these consumer surveys. And today we had the University of Michigan consumer survey come out, and it was a miss across the board, really. I was expecting, rather than expecting, I would not have been surprised by a read higher than the consensus, around or higher than consensus. simply because last month we really saw the worst case scenario get taken off the table, meaning a trade embargo against China. So similar to what we saw in the Philly Fed survey, I thought that perhaps we might see a similar bump in the consumer survey. Absolutely not. We get a miss across the board. Sentiment continues to decline. Inflation expectations continue to rise. Now, one big caveat to this is that they actually recently changed the methodology with which they gather the data. So before it used to be actually people getting phone calls, and now it's really just people filling out a form on online, really. And that might not seem like a huge change, but think about it. If you're talking to someone, you're more likely to show some level of restraint, right? You don't want to look like a psycho on when you're talking to someone else, unless you are, of course. But but if you can act via a layer of anonymity, well, you have all the incentives of just going off the rails, and I think that helps to explain some of the wild reads that we've been having in these surveys. Now, granted, I still maintain the view that most of it is likely just political affiliation. What I've said from day one, it's political affiliation. Biden is in office. Republicans are going to say it's Sleepy Joe's economy. It's all going downhill. Trump gets in office, the Democrats are going to say we're in Weimar Germany and inflation's going to, go to 15%, all right? Something crazy like that. So that is why I'm not a huge fan of these consumer surveys. We can go over them a little bit. What I do find interesting, out of it all is potentially this, this index right here. We have basically Republicans and independents of consumer expectations declining, as well as the Democrats being basically flatlining here near the lows. If you really wanted to find some kind of a signal in all of this, I would look at the Republicans and the independents at this point. I'm not trying to pass judgment on the Democrats. I don't even vote for in America, all right? So I'm European, so I don't really care. But just to try and go through the noise, I think that is the best way you could probably go. Just try to look at what Republicans are saying and independents if you really want to pay attention to these surveys, all right? On the flip side, inflation expectations, do I have to really say anything more? Democrats are expecting Weimar Germany. Interestingly, independents are worried at a similar level. Republicans do see inflation move up, quite, not as in a dramatic fashion as Democrats and independents, but you still see that move up. What you also continue to see is, spending, consumer spending really still kind of hold in there, really. And one of the arguments that you might hear is that either you can't have both. You can't have consumer spending stay high at record highs and sentiment be down the toilet. Well, there is a scenario in which both things can coexist, and that scenario is where people are feeling that bad because they have to spend that much just to stay with their head above water. All right. Now, I'm not saying that that is necessarily where we are now, but given everything that we know, of the labor market, that it's probably a little bit overstated, the strength of the labor market, that is. I would not be surprised if that ends up being the case, but I do still believe that this is still a process. We're not going to get that instant gratification, that aha moment. It'll be a lead up to something else. And I do think that, we're getting close to the summer. And I've always looked at the summer, starting off in February when I started making videos. I argued for summertime, kind of sadness, if you want to quote Lana Del Rey. So I would keep my eyes on the summer, is what I'm trying to say. And that pretty much does it for today. Really, this week we didn't really achieve much. We just had a scare that we might break through and just, plummet below this parallel channel here. So far, so good. Although I maintain my outlook that I gave yesterday, and that is that it is definitely too early to, pop the champagne. All right, we're still hanging on for dear life. And there's still a lot of work to be done. That is for sure. So really, I'll keep this video short. I'll be making a video about gold tomorrow. Nothing too dramatic. And on Sunday, I will be making a video about the week ahead, as we are nearing PMI week. All right. So keep an eye on that. We do, just a spoiler, we have a consensus for 232k initial jobless claims next week. Now, I would expect this number to change as we get closer to next week. But I do continue to think that this is significant. This is a significant number. And, if you've been following my videos, you'll know why. But I'll be going into more detail in Sunday's video. So again, where does that leave TLT? Well, we just got off a credit downgrade by Moody's, which definitely gives fuel to the the deficit gang, to go and have some fun. But again, I maintain my outlook, and that is that deficits and supply, really the supply side of bonds, does have a near-term effect on price and yields, definitely. But in the long term, the long end of the curve is just a function of growth and inflation expectations. And also, this might come and bite me in the behind, really. But another way you could potentially, just kind of frame everything is why aren't you listening to me? Damn you. There we are. Another way of framing things, just as a little extra, piece of information, is the 10-year and 3-month spread. And we're still basically quite flat, really. If you had the view that, inflation and growth was potentially exploding because of all the deficit spending and whatnot, you'd really want to see, some follow through, especially on this kind of, on this spread, particularly right here. Because again, you're not taking on any duration risk whatsoever, as opposed to even say the 2-year, 2-year is really short duration. But again, you're taking a 3-month bill. And a 3-month bill at this point just has, roughly the same yield as a 10-year bond, which doesn't bode well with the, inflation is about to soar. If inflation was about to soar, I would expect the bond market to really price that in and actually have some kind of a normal spread between the two, something like, at least 150 to 100 basis points. Again, this could easily come and bite me in the behind. We could easily, just jump by 100 basis points. And again, I've said this times before, like, in April, right here, I said similar things, and it didn't happen. Maybe this is the time it does happen. So again, keep an open mind is what I'm trying to say. All right, try to ignore the noise, And I'll leave it at that. If you like this kind of content, consider leaving a like, and I'll see you next time. Bye.